Today is Sunday, the 16th of August, and this is my weekly review for this past trading week. And my three key learning points for the week. Number one, in regards to behaviour, I'm pleased with how I approached this week. I remained objective throughout the entire week and felt really focused on just improving and learning in any way that I could. I was engaged in my daily process and identified focus areas to deepen my understanding of my current trading system. Two, execution. I executed my system as per my rules, but I'm starting to feel that my rules aren't currently where they need to be. I still feel like I'm not able to take advantage of as much opportunity as I would like, and that I'm passing on good setups that I could be taking. I understand this is about gaining experience and refining as I go along to truly understand what works and what doesn't. Three, decision making. I'm satisfied with my decision making in terms of acting in line with my expectations. So just to expand on those points a little bit, I definitely felt really engaged this week. I felt like I had a lot of focus in terms of remaining objective uh, around the things that are the most important in terms of my setup, my criteria for my setup, and what I'm noticing in the market, and just engaging with my daily process in the best way that I can, and looking for ways to refine that. But what I've started to notice, and it's been a theme throughout basically this entire year, and I keep kind of coming back to the feelings of just feeling like I need to explore things a little bit more in my own way, as opposed to taking a system that's been created by other people and just following it in their exact way. Because ultimately, in my opinion, there are always nuances to everything, and there's always times where certain things will mean certain things. And if and maybe this is just kind of a lack of experience, but if there is something that it can be strict in the sense that it's okay, this is the exact criteria that this trade needs to meet, and any time that I'm taking a trade, it has to meet all of this criteria, and if it doesn't, then I'm not going to take the trade. And if that's the case, then I feel like, why would I not just automate that and not actually trade? And I guess that's where I'm feeling a little bit frustrated, because there's felt like some really clear setups to take, but I haven't taken them based on those particular setups not meeting, say, one or two of my criteria that I want to see. And at first, when I was passing on trades because they weren't meeting specific criteria, I felt good about it, because it, it was reinforcing my ability to sit on my hands, to remain patient, to remain disciplined, and to just act professional, to not act reckless or anything. But as time's gone on, it feels like it's just not viable in terms of either A, that approach, or B, where my current rules are. And my current rules are exactly kind of what I've learned through Stock B, in terms of his teaching method, which is influenced by Kulamagi a little bit, but it's mainly just what Stock B's teaching, because he's the Kulamagi's not active anymore, and Stock B's got an active forum. He streams every day for the most part, and goes over his rules and makes new videos and things. So I've been following what he's saying, and yeah, it just seems like it's just not really working. And I know that these market conditions that we've been in over the past, say, 8 to 9 months, haven't been the best. There's been periods, obviously, where it's been really great. Coming off the March lows, that was an amazing period. Um, it was the March lows, wasn't it? Yeah, March lows. So there definitely has been periods, but it's just like I haven't been trading like anywhere near as much as what I would have liked, and with that, I feel like I'm kind of slowing my progress down a little bit, because really, even if I'm taking poor trades and losing trades, I'm getting better feedback because I'm getting a better feel for what's going on in the market. I'm getting a better feel for what to look at. I've done loads of back testing, but in terms of actually putting that into practice, into action, and to really ingrain knowing what I'm looking for, what works, what doesn't. And edges deteriorate in some way over time, in the sense that they may still work, but they might work in different ways. And I just feel like I just need to be trading more. And with what I'm currently doing, I'm not really trading as much as what I'd like to be. So in regards to that, these are the trades that felt a little bit frustrating this week because most of them felt quite clear to take. So this first one is QMCO, and it's a tech stock, and it's got a clear resistance level here. So it wasn't gapping above it, but the fact that it's been kind of going sideways for the best part of, say, a year and a half, has reclaimed the 200-day and was forming a solid base above it and tightening into this its earnings report and gapped up. And it's this is the type of market structure that I've seen play out time and time again, and I really wanted to take this trade. And the earnings were a massive surprise, in terms of coming in way higher than expectations, and revenue was also fairly decent as well. But in regards to actual fundamentals, this is why I didn't take the trade, because it didn't meet my criteria. So what Stockbee teaches is that you want to see increase in revenue growth. You don't want to see it declining, because that just means the company's slowing, and ultimately who's going to buy the stock if the company's slowing. So this is what I'm seeing quarter over quarter. Uh, revenue picked up, and going into Q2, which will be the next quarter, it's for some reason I don't understand why it's different depending on what companies report when. But this is next quarter, so it accelerate, but then it declines. So the fact that it's not consistently increasing revenue Q over Q, I didn't take the trade because the fundamentals didn't meet the criteria, and it would have been, as of right now, it would still be open on day 4, and from the entry that I would have taken, it would have been about 8.86R at its peak, so currently about 7.65. So that just felt a little bit frustrating, that I didn't take that, because it felt like a clear opportunity. NIQ was another one, poor fundamentals, but the chart just looks fantastic. These lows here got taken. I guess kind of a failed breakout in the sense that it didn't continue. It was obviously a decent move to the downside, but then stalled out, and then reclaimed this level, acted as support here, and then just got really tight towards this upper resistance level. So an EP coming into that is just that's clear cut market structure. That's exactly what I want to be taking. A surprise on earnings as well, but in terms of the fundamentals again, it it was why I didn't take the trade. So one of the criteria is double digit, at least kind of double digit earnings, revenue growth, and it didn't have that. So I didn't take the trade because of that. But it just looks like it's something that I should be taking. It reclaimed the 200-day moving average. It's a young stock as well, so not a lot of price history, showing relative strength. It would have been from the entry that I would have taken. It would have been an 8R trade. So just a lot of kind of frustration. I feel like it's just things that trades that I should be taking. SMCI. So this was, I guess this is one of the things that I feel like is supporting my reasoning for wanting to just not have as strict rules in terms of these set things in place, and actually just use my own feel and read on the market a little bit more to kind of develop that discretion a little bit, because I feel like that's where I'm not really able to develop in the way that I'd like, and I feel like that's what will kind of give me more of an edge. So in regards to SMCI, it had taken a beating since it topped out back in June, but for the most part had been going sideways, and now recently has started to trade uh, above the 200-day moving average. Uh, Previously in June, and now again on its EP as it got kind of tight into it. So what I liked about this, and it's definitely not a perfect setup because it's not showing relative strength. It's only 62 in that regard, and it's not really had any massive moves coming into it. But one of the reasons why I would have taken this trade, or would have liked to have taken this trade, is because it's clearly kind of forming this ascending triangle here, there, and coming up here and getting tight into these moving averages as they all start to converge. And then it had great earnings. It had really great earnings, and just to support the earnings as well, um, the fundamentals, future earnings. Next, so Q2 2027 is falls back a little bit, but for the most part, these are great. These are great figures. These are exactly what I want to see. So it felt like it was a trade to take in that regard. But then also the fact that tech and I guess hardware and just all of the AI related stocks was starting to catch a bit of a bid or a rebound after Microsoft earnings. So which was the week prior, and it just felt like relative strength was there for the sector. The market was strong overall. The market was trending. It was clear risk on in terms of the general market and the indices, and it just felt like a trade that I could have taken and should have taken. Um, and similar for Nebius, it wasn't the great. And I guess actually with this, because it was gapping into resistance, into this clear resistance level, I didn't like it. I didn't like it as much as any of the other setups. But the fact that there was this tightening coming into it here, um, and the fact that software was catching a bid again, it just felt like it was the right moment to take this trade. And these types of things, they're obviously discretionary, but I feel like they're really valid. And it's just kind of been playing on my mind a bit because I just feel like I'm just not trading anywhere near as much as what I'd like to be. And it feels like it's kind of slowing my progress down a little bit. It feels like I could be progressing quicker, even though I might not technically be taking the best setups. It would just allow me to learn what the best setups are and how frequently they occur over time because I'm engaging with the market more. If I'm sitting on my hands more, it just feels like I'm not engaging as much as what I could be, and I think that's what it is. And it's because it's been a reoccurring thing. It just feels like maybe there's something to that, but I understand as well because I'm early in my journey. I've only really been attempting swing trading since the start of this year, and started studying it properly since November last year. So it's not even been a year, but it does feel like I could be making a bit more progress. So that's kind of my thoughts after this week. Yeah, I'll see how I guess the rest of this month plays out, and then at the end of the month, I think I'll make a decision in terms of the best way to move forwards in terms of potentially changing my rules a little bit. And yeah, I mean, in regards to my rules, I feel like the main thing for me is instead of looking at volume as the main trigger, I feel like relative volume feels like a more important thing. But there's yeah, I won't get into that now. So anyway, that's my weekly review for this week.